Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, let's kick it off with the disclaimer. Disclaimer: this video is for educational purposes only. The statements made in this programming are solely the opinion of the show and are not a specific inducement to make an investment. One must affirm the own due diligence and realize that all investments carry risk. There's no guarantee of profit. All right, everyone. First one I want to bring up is UMC, United Microelectronics. Now, this is a Taiwanese semiconductor play. This kind of is a little bit of a speculative trade here. This is a small cap name. If you come and check out these June options here, there's a pretty substantial amount of contracts that trade here. So, over 15,000 contracts traded here. Open interest of about 1,000. Now, because we are in a little bit of a correctionary environment, I don't think the correction is going to get too bad in the NASDAQ because a lot of these names have sold off considerably already, and there's some great stocks out there that are looking pretty good at these levels. I think we're going to see a bigger correction in the Dow Jones Industrial Average and maybe the S&P. The NASDAQ came back pretty good today and pretty much closed unchanged. So now people were buying these June 10 strike calls. I went in and I wanted to give myself a little bit more time because we're in a correctionary environment. So you don't know what is going to happen with this thing the next day after you buy it. I am in these July 7.5, 12.5 call spread. So I bought the 7.5, sold the 12.5. Now, I did not want to buy this short term of an option, this June option, at a 10 strike. So, the stock is at $9 right now. A 10 strike is about 10% out of the money for a call expiring next month, call it. You got a month and a week for this trade to work out. If this stock starts trading down, this 10 call is going to get further and further out of the money. So, I want to show you guys what I did here. Now, I bought these at the close, so what I did is I bought the July 7.5 call and I sold the July 12.5 call, so I did a vertical spread here, and you can see I paid about $160 per contract. Now, when you take $7.5, which is the 7.5 strike here, so 7.5 plus $1.60, that puts our break even in the stock price on July 16th on expiration at $9.10. So the stock is pretty much at $9 right now. So if the stock were to trade completely sideways, or at least end up at $9 on July 16th, we break even. So I really like this trade. There's a lot of upside here. As you can see here, the delta on these calls is about 79 and 15. So the stock moves up $1, we'll make $79, but we'll lose 15 on the short call. So we're bagging about $65 for every dollar move in the stock. And we're only putting down $1.60 here for this $5 wide call spread. So if this stock closes above 12.5 on July 16th, this call spread will go to $5. And like what I said, if the stock ends up at $9.10, call it $9. If it pretty much trades sideways from here and ends up at the same price on July 16th, we will still break even. So I really, really like this trade a lot. I really like these odds. If we take a look at the chart here, this thing has had a pullback, which I like. It seems to have some really solid support here at this $8 level, maybe even a little higher. It traded up to about 930, came down to this 8 level, bounced again. Traded down from this $12 level back to this 8 level. Back again to this 8 level, and I think we might make it down to this 8 level, and I might even add another option here because this thing does have some great support at these levels. So next options I want to bring up are Alcoa. Now, I did not see any unusual options activity in this one. I've seen unusual options activity in the past couple days, so I've had this one on my radar. We did get a little bit of a pullback in the stock in the morning, so I used that opportunity to get into this stock. Most of these material names have a really hard time pulling back whatsoever, so Alcoa was down about 2% in the morning, so I took advantage and I added this July 40-50 call spread. Now, tomorrow we have some inflation numbers coming out. The consumer price index. Thursday is the producers price index. So it's going to be a couple days of some really important economic news. Sorry, we're having some weird flickering with the camera here, but I like the yellowish tint here. So, yeah, back to Alcoa. Now, this is a aluminum manufacturer. Like I said, we're going to be having inflation numbers come out. So, if the inflation numbers come out high, that signifying that inflation is running hot, these material stocks are going to take off to the upside. So I use this opportunity to add some protection here, because if the inflation numbers come out hot, technology is going to sell off, and these materials and some of the industrial stocks are going to rally. But really the huge beneficiaries of inflation are material and resource stocks, energy stocks, mining stocks. So I'm trying to get my exposure here in these material mining stocks. Now, if we take a look at the chart here, this is what I'm saying. This thing really does not have, obviously it has had pullbacks here, but there wasn't really a whole lot of talk of inflation. Recently there's been a lot of talk of inflation here, and we really have not had any significant pullbacks. Just 1-2 day pullbacks, and that's kind of what we got here. So I took that opportunity to add to Alcoa. And like what I said, there was no unusual options activity in Alcoa today, but there was within the past few days, but it was hitting new all-time highs, so I was waiting for a pullback. We got the pullback today, and now we're in Alcoa. So, thanks for everyone who's been subscribing. I really appreciate it. Make sure to keep the subscribing up, and we'll see everyone in the next one.